Thank you, and welcome back to The Briefcase, where we talk all things business, investing, and real estate. Today we'll be going over the 5 main categories of residential real estate. Now let's get into it. Thank you, and welcome. If you strip real estate down to its purest form, what's left? Land. And for serious investors, land isn't just simple, it's strategic. First, there's no depreciation. Buildings wear out. Roofs leak, HVAC breaks, and tenants complain. Land, it doesn't age, it doesn't depreciate, and it doesn't call you at 2 a.m. Second, there's minimal overhead, no maintenance, no property management headaches, and often significantly lower property taxes, depending on use and zoning. Third, these are the options. Land gives you flexibility. You can hold it, lease it, develop it, subdivide it, or even rezone it. That's multiple exit strategies from a single asset. Fourth, the appreciation through scarcity. They're not making more land, and especially in high growth corridors, as population expands, well located land becomes exponentially more valuable. And finally, leverage without complexity. You can control large parcels with relatively low capital compared to developed assets. In commercial real estate, simplicity scales, and land is as simple and powerful as it gets. And a fun fact about land that most people don't know. Some of the wealthiest investors in history, people like John D. Rockefeller and modern billionaires today, weren't obsessed with buildings. They were obsessed with land. Why? Because land is the one thing they aren't making anything more of. Think about it. Every house can be rebuilt. Every skyscraper can be replaced. But the location underneath, that's finite. In fact, over 90% of the world's millionaires have been created through real estate. And a huge portion of that wealth comes from not the structures, but from the land itself, appreciating over time. Even more interesting, in many major cities, the building on the property actually loses value over time due to the wear and depreciation, while the land keeps going up. So when the smart investors say, buy land only, what they're really saying, own the one asset that scarcity guarantees will become more valuable as time goes on. And that's a game most people don't even realize they're playing. Thank you and welcome. If you're looking to build real wealth in real estate, single-family homes might be the most underrated asset in the game. First, financing is easier. Lenders view single-family homes as lower risk, which means better interest rates and lower down payments compared to commercial properties. Second, tenant demand is consistent. People will always need a place to live, and single-family houses attract long-term tenants, reducing turnover and vacancy risk. Third, appreciation is stronger. Unlike commercial real estate, which is heavily tied to income performance, single-family values are driven by market demand, giving you a steady upside over time. Fourth, the exit strategies are flexible. You can sell to another investor or a retail buyer, dramatically increasing your liquidity. And finally, there are tax advantages like depreciation, mortgage interest deduction, and capital gain strategies can significantly boost your net returns. Simple, scalable, and resilient. Single-family homes are the foundation to long-term wealth. Now, a quick fun fact about single-family homes that will change the way you think about them. Did you know, over the last 50 years, single-family homes have outperformed inflation by a huge margin, while also letting the owner live in the asset? Think about that for a second. Most investments either make you money or cost you money to use, but a single-family home, it does both. You get appreciation, you get rental potential, and you get a place to live or leverage. And here's the wild part. About 65% of Americans live in single-family homes, but a surprisingly small percentage actually treat them like investments. They treat them like expenses. So while most people are just paying a mortgage, smart investors are quietly building equity, raising rents, and letting time do the heavy lifting. It's basically one of the only assets where you can use leverage, lock in long-term debt, and have someone else pay it down for you. And yet, people still overlook it. Crazy, right? Thank you. And if you want to break into real estate with lower risk, strong cash flow, and serious tax advantages, you might have to consider duplexes, because this is the most underrated strategy in the game. Here's why. First, you can live in one unit and rent out the other. That rental income can offset your mortgage, sometimes covering most or even all of it. You're essentially getting paid to live. Second, financing is easier because it's owner occupied. You can easily qualify for low down payment loans, 3 to 5% in many cases, compared to 20 to 25% for traditional investment properties. Third, tax advantages. I'll tell you this. Duplex owners can often deduct mortgage interest, property taxes, depreciation, and even certain expenses tied to the rental unit. That's real money back in your pocket. Fourth, built-in scalability. Once you move out, that duplex becomes a full rental asset. Now you got two income streams from one property. And finally, risk mitigation. Even if one unit is vacant, the other is still producing income. That's a huge buffer compared to single-family rentals. The bottom line, duplexes aren't just homes. They're hybrid assets. They combine stability, leverage, and income in a way few other entry-level investments can. Now a quick fun fact about duplexes that most investors have no idea about. If you live in one side of the duplex and rent out the other, the IRS actually lets you treat part of your own home like a business. That means you can legally write off a percentage of things like your mortgage interest, property taxes, repairs, or even utilities in some cases. But here's where it gets crazy. You can also depreciate the rental side of the property, basically telling the IRS your building is losing value on paper, while in reality, it's probably going up in value. So you're living for cheaper, building equity, and collecting rent, and potentially showing a loss on paper to reduce your taxes. It's one of the only investments where you can live in it, make money from it, and get tax advantages at the same time. That's why so many wealthy investors started with a duplex. Thank you and welcome. If you want to build wealth in real estate without taking on massive risk, owner-occupied triplexes might be the smartest move you can make. Here's why. First, leverage. As an owner-occupant, you can qualify for residential financing with low down payments, sometimes as little to 3 to 5%. That means you control a multi-unit income producing asset with minimal capital. Second, income stability. A triplex gives you 2 additional rental units. Even if one unit is vacant, the other can still offset your mortgage. In many cases, your tenants are covering most, if not all, of your housing cost. Third, scalable cash flow. Compared to duplexes, triplexes increase your revenue potential without jumping into full commercial financing. You're maximizing income while staying in residential leading territory. Fourth, tax advantages. You can benefit from depreciation, expense deduction, and potentially lower your taxable income, all while living in the property. And finally, forced financial discipline. Living in the asset keeps you closely connected to operations, tenant quality, and maintenance, making you a sharper investor faster. In simple terms, you live for less, earn more, and build equally faster. That's the power of an owner-occupied triplex investing. Now, a quick fun fact about triplexes that might completely change the way you look at real estate. Did you know one of the most powerful wealth building strategies in America isn't owning a mansion or flipping houses? It's living in a triplex. Yeah, seriously. Here's why this is wild. When you own an owner-occupied triplex, you can use low down payment residential loans, sometimes as little as 3.5% down, even though it's basically an income producing property. That means instead of saving tens or hundreds of thousands to become a landlord, you can get started for a fraction of the cost. But here's the kicker. While you're living in one unit, the other two units can actually pay your mortgage. In some cases, they don't just cover it, they exceed it. So imagine this. You're living for free or even getting paid just to own your own house. And historically, people who house hack like this, especially with triplexes, tend to scale to multiple properties way faster than traditional house owners. So while most people see a small multifamily, investors see a launch pad to financial freedom. And the craziest part, most people have no idea this option even exists. Thank you and welcome. If you're serious about building wealth through real estate, there's one asset class that sits in a league of its own: owner-occupied fourplexes. Here's why. First, the financing. With just 3 to 5% down using FHA or conventional loans, you can control a 4-unit property, something typically considered commercial level income, with residential loan terms. Second, the income diversification. If one tenant leaves, you still have 3 paying. That stability dramatically reduces your risk compared to single-family rentals. Third, the tax advantages. You unlock depreciation, expense write-offs, and potential capital gains excluded if structured correctly. And fourth, this is the big one. You're essentially living for free. Your tenants are covering your mortgage, maybe even paying you to live there. This is the leverage at its highest form. Low money in, multiple income streams out. Fourplexes aren't just properties, they're financial launch pads. And finally, a quick fun fact about fourplexes that might completely change how you look at them. Did you know that a fourplex is the largest property you can buy with residential financing, like FHA or conventional loans, while still being treated like a normal house? Yeah, which means you can put as little as 3.5% down. You can live in one unit and rent out the other 3. And that's not even the wild part. In many cases, the rent for those other 3 units can cover most, if not all, of your mortgage. So technically, you're living for free. And because it's still considered owner-occupied, you get lower interest rates, better loan terms, and easier qualification compared to commercial properties. Same building, completely different financial rules. That's why so many investors call the fourplex the cheat code of real estate. It's the perfect intersection between house hacking and scaling a portfolio fast. And the crazy part, most people walk right past these deals because they think anything with 4 doors is too advanced. Meanwhile, the people who understand this, they're quietly building wealth, one fourplex at a time. Finally, if you found any of that information about residential real estate interesting insightful, or confusing, please leave a comment down below. And if you enjoyed this video, please make sure to like it and subscribe. And now remember, stay smart.